Okay, recording this video on Sunday, the 5th of June 2016. Hope you're enjoying your weekend. Hope you had a great week's trading. And you've not heard from me for over 2 weeks. 15th of May was the last post I put up on the site. And the reason for that is we've been traveling a little bit and we're back in Sydney, Australia. Having spent about 3.5 months in Hawaii, on the island of Kauai, which was absolutely fantastic. And of course, here we've kind of gone below the equator, and it is the beginning of winter kind of going on. So that's a bit of a change. And at the moment in Sydney, we've got a huge storm kind of rolling through. It's been going for a day and a half, and I think it's got another day to go. Huge amount of rain and wind, and oh, it's ugly out there. Anyway, everything's changed in terms of day trading for me. Gone from a 3:30 a.m. start in Hawaii to an 11:30 p.m. start. So that takes a little bit of getting used to too. So this video, I'm not going to talk about day trading. I'm going to talk about the global macro charts, just because they're really interesting and what's kind of going on. We had some super important numbers come out with employment numbers on Friday, and they were bad. And then on Monday, we've got Janet Yellen speaking, and I think that'll be kind of critical as to where the markets kind of go from there. It's a shame to say no one cares about earnings, no one cares about kind of corporate profits, no one cares about PE ratios or anything like that. It's just a question of what the Fed has to say in response to kind of the numbers. But that's the world that we live in right now. Just gotta don't complain, just kind of get used to it. Yeah, I think Monday morning might be kind of quiet trading until the afternoon when Yellen speaks, and then it'll be kind of a little bit haywire. So just look at the E-mini market just on a daily chart here. Last video I put out, I said 2033 critical level. It was a make or break level, which means if it doesn't hold, it's kind of bombs away. But if it does hold, then it's kind of continuation of the trend. And as you can see, I put out that video. I think it was this bar here. It was a day before this kind of blue professional bar. I think it was on this bar here, where we were kind of flirting with that support level, a pullback in an uptrend. Yeah, we played with 33 a couple of times, and then we broke through it and closed back up above it. And of course it didn't break. The rallies continued, and the pullback to end of trend kind of goes off. It is the highest probability trade. If you're in an uptrend, the pullback support level is likely to hold, most likely to hold. That's the high probability trade, and it goes to an end of trend. But now we've reached the other side of this. Resistance has kind of come in, and do I need to say this? The 2100 level is absolutely critical. I mean, it's been so critical for so damn long. If you look back over this chart, there we go. Oops, kind of managed to select everything there. There's the kind of 2100 level. Just been absolutely key for, what is that? That's a year. So we're back up it again. You got to believe there's a whole bunch of stops that are kind of sitting up above it. I don't know if it'll be too attractive a trade to kind of bust through those stops and then, I don't know, reverse it after that or just roll over. Who knows? But just kind of bear that in mind. With these Rambo patterns at these kind of recent highs, if you look back on the chart, there are areas where we can just run out of steam. It's not as if the professionals have taken profits up there, but there's just a lack of demand. So you see a lack of demand here, and we roll off. The professionals stepping at the lows and then take it up, but then we reach more Rambo patterns, and then we kind of roll off. Here again, we roll off. Here we roll off. This one was amateur up bars into those highs, but it wasn't breaking to new highs, so we didn't get a Rambo pattern generated. But that kind of led to there. The professionals step in on the big volume down days, like this. But coming into those highs, it is quite possible to have a little bit of kind of a sell-off kind of going there. But I think the Yellen speech is going to be critical in determining what's going on. In terms of the multiple time frame view and the system view of what's going on in the E-mini, we're still showing strength. This is just the first sign that pullback end of trend on the daily charts kind of gone off, and it's all red up here, so it's showing the trending system is still showing strength. We need to be breaking supports in order to really have the weakness kind of going on. But what is happening is we are coming up to really important cyclical turns, and on all of these charts I'll be showing you in this video on the global macro. This is what I've done here over on this left hand panel. This is better sine wave on the highest time frame. Now if you're a user of the multiple time frame view of better sine wave and the multiple time frame charts indicators, you can switch on and off all of the different versions, the different time frames. Let me just show you that. So on the inputs here, So you can set it to show the time frames 1, 2, and 3, the lowest, intermediate, and highest time frame. And all I've done on these charts is just switch off the low time frames because they're kind of noisy, and just have the highest time frame chart, highest time frame cyclical turns kind of showing, and better sine wave here. And those are the ones you want to be trading in tune with. And we've got this thing, looming. At some point we're going to have a cross, and we're going to have some kind of weakness kind of going in because of that, but it's not happened yet. So let's see if the Yellen kind of speech kind of sets something off. But you'll see this on each of the charts I'll show you, and just trading in tune with that is really kind of important. Bonds, two really important charts, well, three. There was the bonds, there was the crude, and there was dollar index over the last couple of days. Let me show you the bond chart kind of going on here. Bond chart, we finally came out of this range. Always talk about big blue professional spiky bars. This was the absolutely critical one a few weeks ago. And we played in the ranges, we kind of tested into the lows, bunch of blue professional bars kind of coming into the lows of that, and then we blasted out over the last 2 days. Wednesday was a bit of a weak one because we closed back in after trying to break out through that range, but then Thursday, bang, we took off, and then it's almost as if they knew the employment numbers were going to be weak and the rate rises were on hold or whatever, and all of a sudden the bond market kind of breaks to new highs as the interest rates kind of move down. But anyway, just watch for these big blue professional spiky bars because they're kind of critical. You just need to wait until you get confirmation as to which way they're going to break. And it was a confirmation that the uptrend continues. The trending system here kind of has been long for all of this year, kind of going on here, and we're putting in pullback to end of trend on that intermediate time frame with that move there. Double support, kind of another reason why double support's kind of holding at this point there, and so we break to new highs. So that's the bond market. The crude market, now this is what I've been waiting for. If you go back on the videos at the beginning of the year with the forecast, and then we had an important OMG, oh my god, kind of day, and I put out a video on that. If you go back to those videos, you'll see my view on crude was that we were going to bottom during the first quarter of 2016, we were going to test during the second quarter of 2016, and then we were going to have a trend change during the second half of 2016. Now this has run a little bit stronger than I thought it would. I thought that we would start to roll around in crude a month ago at this kind of end of trend, and that we'd be going through this testing phase kind of going down, because we still got to put in pullback to end of trend on the highest time frame. Here's this better sine wave on this highest time frame, and we're just waiting for that rollover to happen there. We need to test back down, maybe not as far as 30, maybe more than 30, who knows, but that sequence of testing needs to go in. So we're at the beginning of June, and we've still got to put in that weakness. It's maybe that testing phase will last longer than the end of June. Who knows? But we'll kind of have to wait and see. I'm a little bit wary at $50. It's a round number, and I should tell you, the number of people that aren't traders who've kind of talked to me in the last month or so that have said, "Hey, seen crude? Isn't that great? Kind of heading up, it's breaking 50 and blah blah blah." People that are not in the market, and when you hear a lot of people who are not in the market talking about how great a particular kind of market is going, that for me kind of just signals warning bells kind of going off. So I could easily see us, again, we've got a bearish divergence pattern on volume kind of come in, testing down, pull back to end of trend on crude. But so far it's not happened. We've got, yes, a Rambo pattern into that 50 level, but I'm waiting for that kind of testing back down. And that whole sequence is what you're seeing on a bunch of the commodity markets and the commodity currencies. It's been slow to roll over in crude so far, but I think it's due. It should be happening, and we should be pushing back down. It's already started in copper. So there's the cross in copper. Resistance kind of comes in here. Oops, let me just show it here. Resistance, 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 kind of triple here, and the market kind of sold off after a pullback to end of trend and blah blah. And we're testing back into the $2 range here. Now, yeah, Friday was a strong kind of day, and we kind of closed above $2.10. But I still think we've got to properly test it back down. After big range days like that, just wait. Don't jump in, because you don't really know what was going on. And you'll see that in the dollar index and so on. So I think timing-wise, we still have to put in that resistance to support kind of move on copper. It'll be a pullback to end of trend on crude, and we'll get this market bottomed out. Each of those kind of commodity markets bottomed out properly. With gold, yeah, we're going the other way. So with gold, resistance to support. So there's the bottoming pattern at the beginning of 2016, exhaustion sell, bullish divergence, nice pullback to end of trends, kind of going off. The trending system goes up into an uptrend. You can see all of that strength kind of going on here. But we hit a wall at 1300. Resistance comes in on this highest time frame. There's the turn on better sine wave, and we're playing out this resistance to support. Yeah, it was a big day on Friday with gold. We kind of come back here, but just wait. I don't think that's enough. For me, I'm still waiting timing wise for us to test back in kind of properly below kind of 1200. Into this range here. I mean, I could be wrong. We could go straight through 1300, and this is a way, to the moon. But I think timing-wise, on all of these commodity kind of markets, we're going through this testing down phase, and crude is the one to really kind of show the way. Crude's about to flip and kind of go the other way. Copper is still testing down. Gold and silver, I think, are still testing down, and the commodity currencies are still testing down. So here's Aussie dollar. That again hit a high here at 78. That resistance kind of comes in on the highest time frame, and we're going pullback to end of trend. Now, does anybody remember, because I did say this when we were talking about the setup for Aussie, it was so important, this low down here at 68, 69, because we had, look at all these end of trends go off, bang, 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 and a whole bunch of blue professional bars, bang, 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 there at those lows, and that's what's kind of caused this rally go the other way. But I said the bottom is not in because we have not seen exhaustion sell. The last exhaustion sell that we had was here, getting this move going. We have not seen one on the left shoulder here, and that's why I was still long the USD, and I was not switching my trading currency into Aussie dollar. I moved a third of my position, but I still had 2/3 left. And what do you know? Over this last kind of sequence down, there's the exhaustion sell. Kind of gone in. So it was a big kind of strong day, what is that, Tuesday and Friday on the Aussie dollar kind of going in here, but we've still got a little bit of time. This kind of testing down, pullback to end of trend, still got to go off on the Aussie dollar, and then I've got to make a real big decision as to what I'm doing. Am I still going to kind of be notionally short the Aussie dollar, or am I going to flick over to 100% long Aussie dollar? And Canadian is similar to that. They had kind of really strong kind of runaway move, and it's making that pullback to end of trend. So I hope you can see that on all of those charts, then we've still got to make this sequence, this testing down sequence on better sine wave on the highest time frame. It happens to be pullback to end of trend on crude, but on these other markets, it's resistance to support. That needs to be run out on gold. It's resistance to support that needs to be run out on Aussie dollar. It's a pullback to end of trend that needs to be run out. But this is the testing phase kind of down here. Okay, so let's talk about currencies now. Most important one, Japanese yen, because of the carry trade. And this, I've got to say, was a beautiful signal kind of down at the lows with Japanese yen, where we flicked into this uptrend. We had a low risk entry point kind of going on here, and strength, strength, strength. And of course, after Friday's news, the Japanese yen, huge move kind of up and big move down in the dollar index. So the Japanese yen is still kind of powering ahead. And remember, the stronger the Japanese yen gets, that harder that carry trade kind of gets, and it starts to put the equities market kind of under pressure. Euro, which is, people keep on telling me I get this wrong, that euro is the largest component of the dollar index, not the Japanese yen. So looking at the euro is kind of really important. With the euro, we had a lovely kind of signal for the bottom of the euro, which was this nice pullback to end of trend on the highest time frame. We'd had all of our exhaustion sells at the downside here, and we started to break into an uptrend here, but found resistance at this point. So it was a big day again on Friday, big blue professional bar. For the euro, the critical level is 14.5, 15 kind of here. We start breaking up through 15s, all of a sudden the euro's taking off to the upside. So Japanese yen and the euro kind of moving to the upside means the dollar index is going to be slammed to the downside. And here's the dollar index kind of chart going on here. So I know it found support a while ago here on this highest time frame, but that big blue professional bar, I mean, it's below supports, it's had tiny little bit of strength here, but then with Friday's activity, bang, so is the downtrend in the dollar index just going to continue on straight away? Again, with all these blue professional bars, what happens is we go through a little bit of consolidation. We could easily kind of move a little bit outside that range on Monday, but then if we start to move back into the range, you just need to wait until we get kind of confirmation of which way it's going to break. My gut says it's going to break down because we've had all these end of trends highs being made above 100, and this is just a continuation of this downtrend that we've had here. But we could easily just consolidate a few days and just kind of not decide which way to break. And probably playing into all of this mix will be the British pound when we get the vote on the Brexit, and that's why we've had all this weakness in the pound. We've had exhaustion sell and some supports kind of going on here, bullish divergence kind of gone off, but the trending system has kept us kind of short and showing weakness here, and it's until we get that news out of Brexit that it won't be clear which way we breaks. Again, look at these big blue professional spiky bars. We're caught in this really big range kind of here between, what is that, 148 and 144. We come back in, but let's wait and see which way that breaks. It could easily break back below 44 coming into the Brexit vote, and then as soon as the results kind of come out, the market will decide which way it's going to take the British pound. Could be up. We could end up with a kind of weird scenario. Everybody thinks that Brexit is bad for business and bad for the city of London, but the smart money might be saying, actually, I think it's a great thing. Getting out, the UK becomes independent of the European Union, and we could get a scenario where the British pound actually strengthens and kind of does the absolute opposite of what the pundits would tell you will be the result of a Brexit of the UK from the euro. But let's wait and see. The story on the pound is it's still weak. The euro is stronger than the pound, and we're not going to see that weakness resolved until the Brexit vote. So there we go. This is, for me, critical chart, the crude oil chart, as we're coming into resistance kind of here, that plays out, pull back to end of trend. At some point that's going to play in here. Are we going to get that turn in the next week where we kind of test back down, and let's see where that takes us with equities. Looking forward to Monday, looking forward to this week's trade, and hope your trading is going well.